is this about to be regional banking crisis 2.0?
I think yesterday's pricing action tried to allude to it, but we think everybody should take a step back. David George is thinking about it, I think, artfully and correctly. That there's been a handful of credits that have been tinged with fraud, but over the this past week, we've had a slew of regional bank earnings, and predominantly there has been no questions on credit quality and any issues in terms of pickup and charge-offs or early warning signs that there's a credit issue for the industry ahead. So that gives us comfort that these are really one-off items that shouldn't be extrapolated to the entire industry.
Well, what would those warning signs be if we see one-off idiosyncratic examples of 1, 2, and 3? Do we need 4? Do they have to look more similar?
Well, what we've seen is that all of the credit indicators that we look at, like non-accrual loans, criticized loans, like early warning signs of potential issues, aren't there. That being said, it's hard to screen for fraud, right? That's what really spooked the market yesterday. Now that we've seen 3 issues, and is 3 a trend? It's hard to say, but predominantly a lot of the regional banks have said, we're not seeing any credit issues. Even Fifth Third, that had the Tricolor problem with them extending a loan to that failed lender. Everything else was look perfectly fine. And so in our view, these are just one-off issues that shouldn't have ripple effects across the industry.
Right. And Fifth Third reporting today, and we're seeing that stock higher in today's session, up about 1.25%, was up almost 5% earlier today. I mean, there is some sigh of relief, right, as these other banks report, and this is where we need to be smart. Having said that, so was it a Zion's not doing their due diligence? Like, how do we, what's our read there?
So I think what investors and analysts will need to look at going forward is, what sort of risks are these banks taking, specifically risk to lending to non-bank financial institutions, which is really what this Cantor loan and Tricolor were. It's a big growth driver for the industry, and I think this lax credit environment has created a possibility that fraud can occur. So who's doing the more conservative underwriting? Who's monitoring their credits vigilantly, and who's selecting very pristine clients? So that's what the analyst community will continue to dive into in this earnings season and beyond.
Well, when you look at that with this backdrop, is this only coming up because of earnings, or are these issues that would have bubbled up regardless of if it was earnings season or, I don't know, in late December?
Right. They just seem to bubble up, and it seems a bit coincidental that these 3 strings of issues popped up over the past few weeks. I would say that Western Alliance issue with this Cantor loan, they sued in August, but the market only heard about it earlier in the week because of the 8K that Zion's put out. So some of these issues have played out. They just haven't been illuminated in the broader markets.
And with your focus on regional banks, though, do you sit on the Jamie Dimon side of cockroaches, or the Mark Lipschultz not related to me side of
there are people who
right.
throw out the word cockroaches and say, and then there's Jamie Dimon, which makes you wonder, is he seeing something?
Right. I was saying earlier that I need to bring out like a can of Raid every time I speak to you guys. So I would say
but you know what I mean? Like, Jamie, I'm thinking he's got to know when he says something like this.
Right. And I think it just goes to what I said earlier. It's just, the credit markets are open for business. They have been for a while now, and that just creates an opportunity for bad actors to do things. I think vigilance is something that the entire industry and a lot of the bank management teams will be much more focused on, and we hopefully won't see more of these pop up.
What about the auto loans? And that's something that we've been talking about here too, about auto defaults and stress that we're seeing there. Is that something, and who's exposed? Like, how do we roll that into this?
Yeah.
Or do we not?
A lot of the banks that I cover have pulled back on auto lending. just because it hasn't been a good risk reward for them over the past few years. The ones that do are still very enthusiastic about it. Huntington, for example, reported earlier today and talked about auto being a big growth driver for them. So it really depends on the bank. I would say that some of the stressed areas for auto is just related to the lower level consumer that having trouble in this current economic backdrop. But the regional banks do play on a higher FICO level, so we haven't seen too much stress on that front.
Well, when I look at comments from the likes of a Mike Mayo saying, $50 million to JP Morgan means nothing, but it can have larger ramifications for other companies in just about 20 seconds. What do you make of that? Is that your view as well?
Yeah, it is. It's about client selection, right? So, for example, JP Morgan had about the same exposure to Tricolor that Fifth Third had. And we're talking about a few $100 billion bank versus JP Morgan, which is well over $1 trillion. So it just shows the size and magnitude of the potential risk.